What is going on, everybody? Yes, we are still in July, but I want to start preparing for the month of August today and just go over with you what has happened the last 5 Augusts. So we're going to go back through the chart. I have a clean candlestick chart here on the SPX, the S&P 500, and we're going to take a look at what transpired over the last 5 Augusts, because typically what we see is the market achieves some type of a top. It doesn't have to be the overall top to where we start a bear market, but a top to what can then lead to a market correction, a dip. And so part of my goal on this channel is to prepare you to make sure you're informed, aware about what is coming. And I want to do that here. And so if we just take a look at where we are today, it is July 22nd. So we still have multiple trading days left this month. We have 3. And again, seasonality, from a seasonality perspective, we do start to get some weakness that comes into the market. And we have run very strongly after we made those lows in April. And we are due for a bit of a cooling off point. So are we going to get that? We don't know. But let's just take a look at what has happened the last few Augusts. All right, so we're going to start here with 2024. This was last year. You could see that the market made an interim top here on July 16th, and then it started to sell down. And what we want to keep in mind about this particular August is this is what was known as the flash crash of August 2024, where an uptick in the unemployment rate came into play and we saw a big drop down, right? And it started here on this Thursday, August 1st. So happy August 1st, big move down, a gap down the next day on Monday, and then we gapped down again. And then we started to see a bounce from there. So we had some significant weakness that came into the market last August, and it started prior to August 1st. You could see that we sold down a bit here. I remember the Fed meeting that happened when Jerome Powell was speaking. We did get some weakness and some selling that came into play. That dip got bought, and we went on to new all-time highs. So that was August of last year. If we go back to August of 2023, we could see what happened. Boom, we hit an interim top. We were pushing higher, and this followed the big NVIDIA earnings beat where it smashed higher. But we could see here on August 1st, let's see what type of candle we had here. We had a bit of a spinning top candle. Let's make this a little bit bigger. And then from there, we just started to fall lower. And we could see that this dip here from close to this low was about 5.5%. And then you pushed higher out of that. This dip here in 2023, it was more of a stair step down. And you could see that we made lower highs here. Boom. And this actually corrected, I believe, 11% from this high. Let's see, 10.93%. So I was off 0.07%. So it was almost 11% correction before this thing started to blast off. And then you had that huge push higher. So August of 2023 did signal the start of an 11% correction, which then followed was a massive rally higher. So that was 2023. We had some weakness come in August. Let's go back to 2022. We were in the heart of the bear market, really the tail end of it. And you can see here's August 1st. We did push up higher, and it wasn't until August 16th. And this is probably when Jerome Powell talked at Jackson Hole, or around that time. This is when the dip started here, and you could see the drop that followed. But again, remember, this was the bear market, so these drops were faster and more furious. But that dip from August down to the October lows was 19%. And so again, we saw some weakness come into play mid-August here in 2022 after a decent rally that started on June 17th in 2022. So again, that's 3 consecutive Augusts where we have seen weakness creep into the market. Now let's go back to 2021. What happened in 2021? We could see here the first trading day of August was August 2nd. And what happened from here? It pushed higher into August 16th, and then we got a little tiny dip. That dip came in on the 16th of August, and that was only 2.47% before it then went even higher. And then another bigger dip came in on September 2nd. And this dip here on September 2nd was about 5.76%. So here's an instance of where August, really, it had a tiny little pullback, but it continued to rally higher in what is seasonally a weak period. So 2021 was the last winning August the S&P had. So let's go back one more, and I believe this is the last one we're going to look at together. So this is COVID year, this is 2020, and this is following the shortest bear market on record. This was a 35% drop. And here's the first trading day of August. This is August 3rd. And you could see that this thing runs higher up into September. So here was another winning August in 2020. And then at the end of that in September, that's when the weakness came in. We got a 10.57% correction, push higher, another little dip, and then it rocketed back up. So just looking in terms of what has transpired over the last few Augusts, the last three, we have seen weakness come into play. The last 2 Augusts, the weakness was right at the start of the month. If we go back to 2022, the weakness came in at the middle of the month whenever Jerome Powell spoke at Jackson Hole. And then if you go to 2021 and 2020, you could see that both Augusts were winning. Now, keep in mind, the one thing that I've been looking at is how the current market structure really represents and looks similar to what happened and what started happening in 2018 during Trump's first presidency. And this is similar to the April lows that we had. We pushed up and we're in this area right here. And potentially what we could see is this grind higher before a bigger drop. And so since we're following this type of pattern, will this be a positive August that finishes in the green where it's a winning month and the weakness is saved until September and we sell down September and October? Is that on the table? Quite possibly, because the last 3 times we've had losing Augusts. But whatever the case, we know that from a seasonality perspective, August tends to signal some type of weakness. So we have to be prepared for that. We want to pay attention to what is going to happen with the earnings calls. We're getting Google and Tesla on Wednesday. Next week, we get Apple, Amazon, you name it, Meta, it's all the big boys. But we're also going to get a Fed meeting next week. We're going to get Jerome Powell speaking based on what is said in the earnings calls, based on what Jerome Powell says, the rate decision, which they're probably going to hold rates steady. That will tell us where we are headed in August and what is coming. But we can't ignore the fact that we are getting ready for what is a weak time in the market, and we have to protect ourselves. So there you go. You are educated and informed about the last 5 Augusts and what potentially can happen from here. And let me know in the comments, what do you foresee happening in the markets? Are we going to start a period of weakness? Are we going to continue to rally higher? Make it a great day, everyone.